Everyone, welcome back to the show, The Final Bar. Thanks so much for joining us. Really appreciate it. Want to welcome on my guest, Samantha LaDuc. She's an independent stock market analyst and active trader. Samantha, welcome to the show. Thanks for joining us.
Thank you for having me.
You took some time to send us some charts ahead of time, which I really appreciate. The first one was really intriguing, looking at unemployment versus the S&P 500. What is this telling you about the macro environment here?
Well, first and foremost, I like to pull back in time and look at the macroeconomic backdrop as policies dictate price, and this is most often a lagging indicator, but with intermarket analysis, some technical analysis thrown in, it becomes very, very interesting inflection point where on a monthly, the unemployment claims have finally really triggered above the 24 moving average, and you can see that this is in the past kind of inversely related to the S&P. So I am not saying it's not going to go back down underneath and chop around a little bit, but it's intonating an inflection point, a change. And then I dug in a little bit more because obviously I'm not going to just start shorting, calling this a top and become a perma bear. I'm very much a bear bull. I lawyer each side. I'm trying to find the position of both. So jobless claims obviously reported last week. Much higher than expected. Retail sales were also much lower than expected. And I use this track basically to kind of identify visually where we're going potentially. And then I researched, we've got a macro backdrop coming up in February where there's going to be a negative adjustment for prior period in non-farm payrolls that will revise downward up to 500,000 jobs. So that's about 40,000 jobs per month. We could have impetus for this to turn around solidly, and with that, some market pressure. And on that, back on November 1st, when we kind of broke out, if you will, we moved 100 points, and since then we moved maybe another, 100 points. So nothing bearish in price action. I'm not claiming that we haven't had, great trend trading, if you will, but I do look at the risks, and I'm looking obviously very much at the fact that we have a coordinated central bank easing effort going on worldwide. In other words, they're not just easing with rates, they're doing QE. So where's the panic buying? I want more.
Right.
So, basically, I'm looking at this going, we really should take a little care just in sentiment alone that we have had, global liquidity back in August of 2018, peak, if you will. We had yields back off solidly October 3rd, 2008, rollover strongly. We have just curious, I think, major banks adding liquidity, and we have not yet done our panic melt up. It's kind of, it's pretty orderly, wouldn't you say?
Absolutely. And it's a fantastic chart. I'm always very interested with trends that have been in place for so long that I think a whole generation of investors now have not invested in an environment where unemployment is going up. It's uncharted territory, pun intended, which means, I'm always interested in environments that people might be underprepared for, right? They just haven't experienced it yet. Now, the second chart that you sent was, getting a little more granular in terms of growth versus value. Can we talk about that take? What is this showing you?
Yeah, it's basically, I'm looking at rotation. So it was, very nice to see reflation, trades in commodities start to move higher, copper, iron ore, and that whole XME contingency, come off the bottom. Oil and gas has been a beautiful trade, off the bottom if you're swing trading in a smaller time frame. But ultimately, it's this momentum to value rotation that I'm really looking for to identify when it's time to, be careful. In other words, if they sell Apple and Microsoft, which are momentum plays, and money starts rotating into the oversold bottom fishing value plays, be careful. And this is not triggered short. It's a trend line, going back, if you will, and it's in a relative strength. It's a ratio, basically. And if it breaks that little red trend line, I see cause for a market correction, and it would be very, very interesting to see if we bounce here, in which case market will be fine. Momentum trades are in control. or if we break, which right now it's intonating a potential inflection change, then money comes back into the oversold stuff, think reflation trades, and out of momentum. So the cloud plays, the unicorns, the Microsoft and the Apples of the world. And if they sell Apple and Microsoft, why buy anything else?
Those are two fantastic charts, Samantha, and I love the second one. And again, you've highlighted two potential outcomes here, or maybe one outcome, portrayed with two different lenses. But it's an environment that I think a lot of people are not necessarily prepared for. It would certainly be a changed environment that I think a lot of investors would be caught potentially on the wrong side, at least to start with.
And also bonds. Bonds are not
Yes.
excited about this particular move higher, and maybe because they know this combined effort of fiscal stimulus, monetary efforts are going to jumpstart inflation, and nothing is worse, obviously, for bonds than inflation. So I think this is very, very interesting year-end action, if you will, but being careful into the new quarter, I think, is merited.
These are two very helpful charts, Samantha. We have to move on, but I want to thank you so much for sharing your perspective. Thank you for coming on the show. We'd love to have you back in the new year, all right?
My pleasure, David. Thank you. Happy holidays.